Hey everybody, Courtney Smith here with our July 5th, 2021 for all of our American fans out there. Happy 4th of July. Remember, that's Independence Day when we declared our independence from Great Britain. But I like to think of it as Financial Independence Day. But maybe that's just me. But when I see those fireworks go off and I'm stuffing a hot dog in my mouth, I'm thinking financial independence. And of course, we can never be independent of this. All right. So the market continues to do what we've been telling you it's going to do, which is a sluggish bull market. But most of the factors turned out to be a little bit more bullish this year than this week than they were last week. Look at the purple predictor on there. This thing just skyrocketed. So here, just a couple of weeks ago, in the third week of June, it was running behind the market. It was very below the price action. Now it's not only caught up, it's actually a little ahead. That means the smart money is seeing that the reflation trade, the Biden boom trade, is coming back in place. Dow Jones also, that you can see here, the little green line, that shows that buying pressure is accelerating. At the same time, selling pressure is declining. NASDAQ just keeps chugging higher. The purple predictor was not bearish before, so it's actually just staying neutral at this point. But the market, it's very overbought. I mean, it's going to be hard to sustain this type of momentum, which is why I keep saying that it's a sluggish bull market. We should see lots of little dips. Currently, our seasonality indicator is on a neutral signal. Our utility signal is a bullish signal, but it's bullish, but you can't be buying utes. They're going down. Okay, now, seasonality. I think this is really what's telling us. Here we've started our seasonal, we had our dip that we had that a couple of weeks ago, and now we're, I think, in this seasonality. Now, I'm pointing to the red line because that's the most conservative thing, but we could very well be on the purple line. It's purple and red that we need to look at. Both of them should be rallying right now, which they are. So seasonality is working beautifully this year. Now, one of the things to consider is once we get into August, you'll notice that the red line, which is the post-election year after the incumbent party loses, all right, we start seeing it go down. And we make lower lows than we made in June and July. But if it's the first year of a Democratic president, it just keeps on going up. So, of course, we hope that it's the purple line. Up until now, they've basically been running in parallel, and they'll run in parallel until really August, and then they start to diverge a lot. So we're going to have to pay a lot of attention to price behavior in August in order to determine what's going to happen after that. It's going to be a big bifurcation. Asset allocation, moved too fast. Asset allocation pretty stable, which means that there's no money coming in or out of the bond market right now. But the RISKDICATOR over the last couple of weeks, it's confirming this bull move. When people want risk, they buy stocks. When they don't want risk, they buy bonds. Okay, you got it? So increasing risk is always bullish for the stock market. Now, we wouldn't want some hysterical risk mania because that means people are taking too much risk, but this is perfect. This is just perfect for what we're looking for. Very supportive of the market. European stocks, on the other hand, are not doing as well, okay? They led this rally from May into June, but they've been smacked here, and they're really not recovering much at all. The yield curve remains drifting slower, okay? Still positive. You can see that down in this chart right here. Still positive all through the yield curve, but it's drifting lower. Not to a danger zone, but this is not good for the market. It's kind of a background bad, but anyway, okay. Bonds continue to drive higher in a sluggish manner. I think the fundamentals are going to change here pretty soon. Remember that the Fed is talking about raising interest rates. So why are 10-year treasuries, why are the interest rates in the 10-year sector and the 30-year sector, why are they going down when the Fed says they're going to be raising interest rates? Well, here's why. Because they think that if the Fed is talking about raising interest rates twice in 2023, that that'll be the end of inflation, and therefore you should buy bonds. I don't think so. I think we're going to get another huge move down in the bonds. I think this is one of the largest bubbles ever in history. Bond key factors. Here you see the chart here, moving to new highs. That says higher yields. The price of gold, that's the gold line here, says could be higher, could be lower. And then the blue line here is starting to crack down. So I think we're going to start to see these rates be stable. Bullish indicators for yields, bearish indicators for yields, net, who cares? Call it a wash. The dollar, on the other hand, is really strengthening, particularly against the euro. I think it's going to continue. Why? Because the U.S. has the strongest economy of the major economies. That's number one. Number two, the Fed has the tightest monetary policy of the major economies, excluding China. What? The most tight? Well, yes. Yes. Didn't you hear generous Jerome Powell when he said he was talking about raising interest rates? Heck, in Europe, they're not even talking about, let alone talking about. They're not talking about. No. So the Fed has the tightest monetary policy simply because they're talking about. All right. Now, if the dollar's strong, then gold should be weak. But notice it's really kind of stable. It's actually doing pretty well. So when you see a market do well in the face of negative news, that's a bullish thing. Now, it's too early to buy yet, but we have a major theme coming up. I'm going to do a major webinar on it in, let's call it 2, maybe 3 weeks, something like that. And we'll tell you all about how we're going to make a major play in the price of gold. And it's going to be from the long side. And here we have one indication that this bearishness in gold is starting to end. Okay, it may not be over yet, but it's getting close. And we're going to start to see a major rally start. But let's wait a week or two. All right, our gold indicators, slightly bearish up here, slightly bullish here, and pretty clearly bearish down here. So net, slightly bearish. Crude oil, huge pop. As I'm recording this, I'm in the United Arab Emirates, and I'm staring at gigantic bunkers filled with oil right now as I'm sitting here looking out my hotel window. And the UAE threw how shall we say, a wrench or a spanner in the works, depending on where you're from. But nonetheless, the point is that OPEC Plus, which is basically OPEC plus Russia, had agreed that they would increase the production of oil by about 400,000 barrels a day starting in a month. Actually, starting in 2 months. The UAE said, no, we don't like that because our base is too low. We're going to actually be the ones that won't be getting as much of that extra money as we deserve. So right now, talks have fallen apart. Demand continues to increase. We're going to $80, no question about it. A lot of people in the industry are talking about $100 oil again. That's certainly possible because we're choking off supply in the United States and we're increasing supply very slowly in the other countries like Saudi Arabia and the UAE, who can pump extra oil, 1 million barrels a day without a problem. So look for crude oil to continue higher. Don't forget our oil webinar that we did, and it's posted on YouTube for more details. Bitcoin got to be bearish, although the smart money is represented by the on-balance volume. They're starting to pick up this quote-unquote cheap Bitcoin here. But we're making lower lows, lower highs, so it's a bear market. I don't have a position, but if I had one, I'd be short and not happy. Why would I not be happy? Because I don't like fighting the smart money, and this is the world's most sluggish bear market. A break below the lows that we made a couple of weeks ago, I'd want to get short. All right, freebies, love having you here. You know, you're our second favorite people in the world. Of course, I mean, come on, the fully paid up members are the most favorite people in the world. All right, freebies, let's carry on here. So please, it's still in force, how to profit from the price of oil. Go to YouTube/Courtney Smith Trading to watch that video. All right, it's explaining exactly why the price of oil is going up and how we're making money from it. The second thing you need to watch on YouTube is the Biden boom bust. This explains to you exactly what's happening in the economy, what's going to happen in the economy, and exactly how to profit from it. You do not want to miss these free YouTubes. And if you subscribe to Wall Street Winners, like become a super cool paid up member, I'm going to give you my special Biden boom bust special report where I identify 4 great stocks that are going to profit from the Biden boom. We'll talk about the Biden bust later. And in addition, I have a special report on the oil, giving you 5 stocks that I'm buying right now to make money in this gigantic oil boom market. All right, everybody. We will talk to you later.